From Cincinnati, Peter Sorrentino, Senior Vice President and Senior Portfolio Manager at Huntington Asset Advisors. And Peter helps oversee about $14.5 billion in assets. Peter, what do you think of the rally that we've seen in New York? Is this going to be the trend for the rest of this year?
Good morning, Susan. We would hope that we'll see some follow-through with this. We had been, as you pointed out, and I think in some of the earlier segments, the sell-off that we'd seen through the early part of October had really taken us down to levels that, again, paralleled the 1974 lows. We were down to single digits on forward earnings in a number of industries in the U.S. And so now that we've got some kind of an agreement here with regard to the sovereign debt issues in Europe, whether it's the end of the chapter or just simply a beginning of a new chapter, at least we get a hint that perhaps the credit default swaps will not be triggered, which would then pull the U.S. banks into this. And so that, I think, gives us some hope that the U.S. financial system can continue its somewhat tepid recovery.
All right, but do you think this solution that we got, or this deal that we got from Europe, really solves and cures the disease?
No, none whatsoever. I'm sure you're getting their calls right now going in from the Irish and from the Portuguese going, okay, where's our accommodation? The Greek bonds get a 50% haircut. What about us? We've implemented measures. We've suffered quietly for the last couple of years. What will you do for us? I'm sure that has to be taking place right now. So, as I said, I think this may be the start of a new chapter, not the end of the book itself. So it's not out of the woods, but it's a serious effort, unlike some of the ones that we've seen in the past. €1 trillion on the table. We now have definitive in terms of the haircut that's going to be put onto the Greek bonds. So we're beginning to see a realistic approach to solving the problem, but by no means have we seen the solution to the problem.
Right, okay, so you don't have a solution right now, but a bit of a Band-Aid again put over the gaping wound. So how do you trade in the meantime?
Our view is that this is still a range-bound market. We think that the fundamentals in the U.S., while there are some positive indications, are still very tenuous, and that we have a lot of policy changes here in the U.S. that kick in after the first of the year, increases in regulation, taxation, and so as a result, we're trading the range. We think this is the upper end for names that we've had a nice ride in. We'd be inclined to sell, and we were buying pretty heavily a couple weeks ago. We'll sit and we'll watch and see how far this goes.
Peter, that's interesting. Did you just say that you're selling into these rallies, so you don't have faith that the gains will continue?
No. We think that there are clearly some situations where the names are getting overextended. We think there's a little too much optimism in a few names, but it's very specific to individual names. As we've seen in the earnings report so far, it's been a pretty positive story. Some of the stocks have done extremely well, but then again, looking forward into next year, the picture becomes increasingly murky. Again, the changes in regulation and the taxes will impact some industries more heavily than others, and so we're willing to sell into that unknown as opposed to take a chance that it works out all right.
All right, interesting. Peter, thank you so much for your time today. Peter Sorrentino of Huntington Asset Advisors, where he helps oversee $14.5 billion in assets.